Alright, so today we're going to do a little quick video about running the numbers on a duplex. Just had one of my realtor buddies send me a listing, and I'm going to go through the process of how I analyze the deal. So here I'm on that Bigger Pockets website, and I use the rental property calculator. And we're going to go to start a new report. It's pretty straightforward. We're just going to enter the information. Looks like the listing is at 1945 DeSoto Street, north of Maplewood, Minnesota 55117. Maybe it's on the border. Let's see. Just go to Redfin, look up the property real quick, grab some information regarding the taxes or previous taxes. Yep, it's coming up as St. Paul. There it is, right here. So this is the property listed at $399,000, and it's a 6-bed, 3-bath, 2,500 square foot. There's some pictures. It looks like it's a side-by-side, which is great. There's some pictures. Bathroom is okay. Looks like the basement's unfinished, so that's a plus. It has in-unit washer and dryer. That's also a plus. It's pretty spacious. Got a deck on the back. Two-car garage. Pretty nice yard. Some cracking on the driveway, but that's not too bad. Everything seems to be okay. Looks really nice. All right. Okay, $399. So $399. Let's do 6% closing costs. I'll just put 25,000. And we'll do 20% down with the interest rate today of, let's call it 7%. No points. We'll do 30-year fix. Income on this. So we can go to. The good thing about Bigger Pockets is they have this rent estimate tab here. You can actually go and look at the area average rents, and find out what you could potentially rent this property out for. So it's a duplex, 3-bed. Let's call it 1.5. So it looks like we're low confidence that you can probably get it to 1400. Be a little bit conservative here and probably call it 1350. Here's the comparables on the right side here. Kind of shows you all the area rents. So we're about the median, middle. So let's call it 1400. Let's go back to here. So you got two sides, so we'll call it 2800 for total gross rents. On here they say 1600, 1700, but you know, let's stick to the conservative side and just say it's 1400. Taxes. Go to here, we'll pull up the previous tax here. Looks like it's going to be 5,396. Alright, let's that in here. Insurance, we'll call it 2,500 annually. And then we'll just put 5% maintenance, 5% vacancy, 5% cap. You can put 5% here or 10% for your management fees, but I manage my own property, so I just put 0 there. I could put 5 to pay myself. This is a side-by-side, so let's just say we pay for some garbage. It's $50 a month. And it's split, so I believe these utilities are split. We'll just leave the utilities as tenant pays. Okay, so we hit finalize analysis and we'll scroll up to the top here. So currently we are negative $450 in cash flow, which is not good. That is definitely not a good deal. At the price, at the interest rate, with maintenance, capex, and vacancy, we're looking at a total cash of 104,000. This, by definition, would be considered as an alligator. We do not want alligators, so let's go and edit this. What can we change to potentially make this a good deal? Now, I don't know what you guys return or yield or what you're looking for as far as your investments. Currently, I'm looking at about a 5% return, 10% if it's great in this area. 1,400 per side is kind of low in my opinion for a 3-bed, 1.5 bath. Let's go bump this up here, this rents. Let's say we can get it for the actual guest here of $1,697. Let's call it $1,650. And we'll bump it up to 3,300. See if that changes or what changes. Update. Oh, that's great. It went from negative 450 to negative 25, and that's after your reserves, maintenance, vacancy, capex. So that's a lot better. Let's go adjust some more stuff here. Let's say we wanted to offer 350,000, just because right now the market's crazy, nobody's buying, because rates are high. Don't believe that, and there's always a deal to be made. You can always try to work the numbers. And let's say you buy down points and you put it at 6.5. All right, well, now we're looking at a good deal. I mean, $328 in pure cash flow. That's, closer to my yield, 4.15. With the offer price, purchase price of 350,000 and gross rents of 3,300. This is looking more like a deal to me in my area. Now, is 1650 wish rents? Could be. According to this rent estimator, 1697 is low confidence, so I would probably be err on the side of conservativeness, and if that's a word, go down to probably 1600, 1650. Let's say we wanted to do an offer price of 325,000 because we want to write a disrespectful offer, as the words of one rental at a time. Okay, well, it's 6% cash on cash return, $454 of monthly cash flow. That's pure cash flow. Yeah, this is something that I would pursue at that price of 325,000. I know it's listed at 400,000. That's a $75,000 haircut. Don't know if the seller is going for that right now. We could definitely check on what it sold last time or when it was recently sold. So you can see here the price was listed April 8th. So it's about 24 years now. So they're coming up on their depreciation coming to an end. So they have, it looks like they have quite a bit of equity. They bought it for 120, listed it for 400. Quite the appreciation. Well, there you have it, guys. That's what my thoughts are. For this property, looks like they've had one owner since 2000, 24 years of ownership. Depreciation schedule is coming to an end. Looks like they're just trying to get out of it and move on to another property. So yeah, I would definitely offer this at 325. So assuming I can get those rents, and assuming everything is okay inside. From the pictures, they look like they're not too bad. A lot of value add here. It's a potential. So that's how I analyze a deal, and that's how I start the process of pursuing a property or not. So thanks for staying with me here today, and you guys have a great rest of your day.